Welcome all to the Node, your place for news, interviews, and education. I am Mike, aka Veteran Crypto, and I'm sure joining me shortly will be David. And if you want to find us online, let's go ahead and share this. You can find us on YouTube at the Node Network, all one word. And this is where you can find all seven of our channels. So you can find the Node Monday through Friday, 9 a.m. to 11 a.m. You can find Crypto and Chill Tuesday and Friday at 5 p.m. to 6 p.m. The Blockchain Report Monday, Wednesday, and Thursday. So immediately after the show today, you can find Jeff doing deep dives into early projects. Sovereign Soil on Saturdays is where I talk about emergency prep and homesteading. Actually, might have some exciting content coming up. My brother and I are about to pull the trigger on a 64-acre property on the river near me, and I'm going to be doing the build. So I'm going to be the general on building out a lodge there for our adventure tour company. So it should be exciting. Yeah, so stay tuned. I mean, it's going to involve basically the whole process that I did here, as far as doing the well, the septic, getting the site approvals, all those sorts of things. But should be a beautiful property when we're done. So yeah, excited about that. Market Wrap Live. So today is Thursday, so it will include 15 minutes to 20 minutes of charts and analysis. If you want David to take a look at your project, then go ahead and pop in the chat on YouTube, and ask them to take a look at your project. And immediately after that, there should be a live coaching session with Ellie. Saturday Night Fever at 6 p.m. is where Jeff, he has a bunch of interviews lined up with local DJs in the Bay Area. And you can see where they do tutorials. They just talk about the festivals and concerts they go to, their experiences with that, and then also they just sometimes spin music. So it's a great place to hang out, chat with people, and just listen to some music if you're into that style of music. Tonight is again, we are a network. We have multiple channels, so there's actually 4 shows today. This one, Jeff, after this, the market wrap at this afternoon, and then this evening is the red pill. And that's where we just talk about hot button topics: politics, religion, legalization of certain drugs, Second Amendment rights, freedom of speech, you name it, we talk about it. Gaming and Chill Wednesdays and Sundays at 6 p.m., where we have a couple of members of our community that get on, play whatever game that they're feeling like playing that evening, and just have a good time. They just hang out and have a good time. So let's see. Over here on X, let me go to the profile. You can find us at the Node channel. Actually, hold on. No, sorry. I was doing a little bit of work this morning. It is at the Node_network. I was like, what the hell? So let's see. Yep. At the Node_network is where you can find us there. And David has been doing a lot of really good work on our website. So this is the node.pro, and this is truly the node of the node. So if you come to the homepage, he just added last night these buttons here. So member meet path, the newsletter, the shop store. He actually posted, I'll show you here in a second, our merch that's up for sale, and a no-cost coaching call. So if you're thinking about doing the coaching program that he's demonstrating today on Tuesdays and Thursdays, but today is one of those days, then that is a place to where you can schedule a no-cost initial consultation to see if it's something that's right for you. You can also find our schedule for our programming. Let me zoom in a little bit. You can find our schedule for our programming. So all those channels I mentioned are the ones in gold, and the evening are the ones in red. These purple calls are the ones that David does in his community. He's going to be also simulcasting those to Discord and a members-only YouTube channel. So if you want to join that, that's $99 a month. That's where you can meet with other DeFi investors and there's always lessons in education, but also a great place to meet a mentor. Somebody that's aligned with your goal, financial goals, your risk tolerance, things like that. So, great place to hang out and meet new people and learn what everyone's doing to be successful. Align yourself with successful people, and you're much more prone to be successful. If you surround yourself with unsuccessful people, you're bound to be unsuccessful. The company you keep very much dictates what it is that you're able to accomplish. We got the courses. So DeFi University is our no cost educational course. If you want to jump into that and try that out, it's a structured course with quizzes and all that kind of stuff to make checks on learning to make sure that you learned what was actually put out. Community again. Let me zoom out a little bit. So he added the YouTube node network. So we'll be adding that here soon on the on YouTube. We got the school. So that was what I was talking about with the calls, and of course the no cost Discord. So you can join the Discord, meet great people. We have a great community, and soon there will be a paid portion of that. But this portion will remain no cost. Here's some details about the coaching program that I was talking about, and where you can put in your email and schedule a time to meet with David. So here is the newsletter. That is $20 a month, so about 66 cents a day. And I will show that to you right now. I generated it this time ahead of schedule just to make sure.
No, so what ended up happening was for some reason when this stuff runs on Google Cloud, it runs on this service called Cloud Run, and sometimes the builds fail, and I have no idea how it goes from hey everything's working to literally overnight just like not working. So I rebuilt it and it's working again.
Nice. So I generated it, and it went through, and it only takes like maybe 10-15 seconds to go through and generate this. But it's going to multiple sources. So, we like to make sure that we verify and get accurate data. So it goes through and it verifies from multiple sources, and it gives you the ETF inflows and outflows. It gives you derivatives, fear and greed, all those kind of basic metrics that you want to be looking at. Gives you prices, what the 24-hour change is, and then hyperlinks. This is very important. Hyperlinks to verify data. You should always verify data. Ranges. So it will give you ranges. Basically giving you trading ranges. It will give you liquidity pool ranges if you're wanting to do a concentrated liquidity pool.
Liquidity.
It will give you the flows of where the liquidity is flowing. It'll give you derivatives, catalysts, what's going on in the market right now that's causing the market to move the way that it is. Whatever the big story or major story is of the day. Quick hits, just basically quick highlights of different news articles with links if you want to go and read deeper into each of those. If you have the time. If you just want to get your finger on the pulse, you can just read the headlines. But if you have the time and you want to dig in deeper, we like to make sure that you have that ability that, hey, this is where we got the information. This is the source that we got the information from. And then our take. So, this is the node take. This is overall what we feel is going on in the markets today, what we see is going to be happening in the next 24 hours, and 72 hours. And then last but not least, the store. So this just got put up last night. And David's been doing a great job on this. You can see that we have hoodies. We have these packages. So if you want to get a T-shirt with a water bottle, if you want to get your investor's journal with a thermos, like a water thermos, if you want to get a T-shirt with the journal, if you want to get the full desk kit with the journal, the T-shirt, and the water bottle, you can get whatever you want here. We got red pill stuff, DeFi University, Node Network. We got hats. I'm actually going to be ordering one of these here real soon because I want to wear this during the live streams.
And so, Mike and everyone, this is just like the very first iteration of this.
Yeah.
Like, I just wanted to get a couple of things up there because I want to be able to wear a Node hat and I want to wear like a Node Network t-shirt, So
Absolutely.
like this is just the first version, and the plan is, look, I've got a lot on my plate here to be able to like
Yeah,
dedicate time to the store, the newsletter, like everything else. There's a lot. So this is just the first version. Just wanted to let everyone know that.
absolutely. Absolutely. Let's throw you up here. All right. So let's go ahead and jump into some news. So I'm actually going to skip by Bitcoin price. I think we all kind of understand what's going on there, and I'm sure that we'll talk about that.
Ooh, I don't know. I don't know. Can I chit chat around BTC for a second? Because
Sure.
I've been trading this thing this morning.
Well,
And
are you sure that we're not going to talk about Bitcoin at some part in the next 2 hours?
we're definitely going to, but I just wanted to highlight something. This is, you see, I've been patiently waiting for an entry, and I got one. I finally got one. So this is what I've been waiting for. Number one, if we just zoom out on BTC real quick to a daily, I was waiting for this literally for weeks, sitting, waiting, doing nothing, just waiting. And BTC got up to that 200-day moving average, and I didn't, open the trade at the 200-day. Instead, because look, I don't have a crystal ball. I don't know whether Bitcoin is going to rocket through that 200-day or whether it's going to get rejected. I just don't know, right? It's impossible to know. So I was looking for a little bit of confirmation that maybe my market bias of thinking, hey, Bitcoin's going to pull back here. I was just waiting for some confirmation of that. And so what I was thinking to myself was, well, if Bitcoin touches that 200-day moving average, which I've got marked here with that arrow, this little squiggly, that is the 200-day moving average at like 83 and a half, 84. Bitcoin moved up to the 200-day and then immediately pulled back. But the important thing for me was this trend line, which was resistance here, here, and then when it broke and Bitcoin tested that 200, that's fucking bugs, dude, I swear to God. So when Bitcoin tested that 200-day moving average, I thought to myself, okay, it's probably going to pull back a little bit. If I told myself, if it pulls back to the trend line support, I would enter a short position if it broke down through that trend line support. It did. I entered my first test short position, and I'm getting paid. So what I'm looking for here is, now that the market is telling me, hey, you could be right, like just in the immediate term, it's only been a couple of hours. What I'm thinking about now is, okay, well, where do I add? And, do I want to roll my stop down to just lock in a profit or not? I think, I'm going to play it fast and loose with the stops here, simply because the S&P, man, like this is a tear. If this thing ever decides that it wants to just like, take the elevator down for whatever reason, I have no idea what the catalyst could be. I've been thinking about what could a catalyst be for the S&P to pull back here. It's got to be something to do with rates, or maybe to do with oil, or maybe like I don't know, maybe it's the AI, like one of these private credit firms just like completely blows up. Who knows? But what I do know is that this type of a tear, like you can't have S&P, NASDAQ, Russell, Dow futures up only every day for months on end. Like that's unsustainable. It will eventually lead to the type of crash that we saw, in after the dot-com boom. So my thought process here is, Bitcoin touched its 200-day moving average. It pulled back to trendline support, broke the trendline support, and if we're still in a Bitcoin bear, well, then I would expect it to, start off that next leg down. So that's what I'm thinking about. So wanted to share that just real quick, Mike, before we hop into any news here.
Sounds good. All right. So, Bitwise CEO declares 4-year crypto cycle dead. So this is kind of why I did the headline that I did for the title for the show, as institutional era takes hold. So let's hear a little bit about why he thinks that's the case. So Hunter Horsley, CEO of Bitwise, made headlines today by stating that the predictable 4-year Bitcoin cycle is officially over. He argues that persistent institutional demand via ETFs and corporate treasury adoption, and I'll add, not to say that I 100% agree with this, but the U.S. There has been a lot of talk about a U.S. Bitcoin, treasury that the U.S. government is actually going to use, both seized Bitcoin and potentially bought Bitcoin to, as a uh, almost like a Fort Knox of value, for the U.S. government. So let's actually click into this, and I will share my screen. Where is it at?
Bitwise. So remind me, Bitwise. They're what exactly does Bitwise do again? Are they an ETF? Are they a custodian, or what do they do?
I
No, I
think
don't remember.
Where is crypto ETF boom continues the debut of first fund to track Canton? That's interesting. I'll come back to that.
So Mike, Bitwise Asset Management, um, they, I guess, are a bridge between Wall Street and the digital asset world. So
Yeah.
they create wrappers like ETFs.
Okay. Okay. So
So
they
yeah,
have a suite of products, probably.
they're one of the most popular ETF wrapping companies, I guess you could say.
Gotcha. Gotcha. So yeah, I mean, it's I've heard this narrative mentioned quite a bit about the 4 year cycle being dead, and I can definitely see the case for the 4 year cycle, flattening or looking different. I don't think that we're at a point in adoption where we can declare the cycle dead. I mean, what are your thoughts, David?
I think that human beings like to ascribe price action to things that have nothing to do with moving price.
Hmm.
I think that price moves first, and then people say, oh, it moved because of
Yeah.
this reason or because of that reason.
Mhm.
When really, I mean, did it? Did it really? And so when it comes to this 4 year cycle, it's been a really interesting rally since the beginning of February.
Well,
But
what's interesting, it's easy to paint a picture after the fact when you can take, kind of cherry pick, the data and paint the picture that you want. It's easy. To do it before the fact is the hard part.
right, and then what's even harder than that, to think that you're right before something happens, almost like prognosticating, and then
Yeah.
to sit on your hands, wait for that thing to play out, and then make a commitment. Put your money where your mouth is, make a financial commitment, and that's what trading's all about. How much are you willing to risk to find out if you're right, type thing. But when it comes to like the 4 year cycle, I don't see any reason to believe that the 4 year cycle has broken. I just don't see it,
Yeah.
not yet anyway.
Mhm.
It looks to me like the 4 year cycle remains intact. And so if the 4 year cycle is broken, well, how in the world would we know? Well, I think that if Bitcoin before the beginning of this fall is trading up at $100,000 again, like
Mhm.
99,000 or $100,000,
That would be a
that would
strong case.
that would tell me that the cycle's broken. Yeah.
Yeah. No, and I would tend to agree. I mean, it's easy to make declarations and stuff like that, but until there's data, or facts to support it, it's it's just that. It's an opinion. It's a statement. So yeah, it's but I do tend to agree though that the ecosystem has changed. The crypto environment has changed. It is shifting from a retail driven, almost purely emotional driven market to a more institutionally driven market. Because I think we can all agree most, if not, well, not all, but most of retail has been driven out of this market. It's, the Bitcoin conference is proof of that, I think.
Did you see
Um,
the Solana Accelerate conference? I was thinking of going to that in Miami. A couple of months ago. Well, it was in May. It just happened. So a couple of months ago, I was thinking about getting tickets to go to that Solana Accelerate conference, and I saw some video content of some of these, big auditoriums where they were expecting like hundreds of people, and no one showed up. No
Yeah.
one showed up. And not just that, man, like some of these developers are weird as fuck, bro. Like,
Yeah.
I've seen some videos of like these people dancing like furries on stages, dude. And it's like, wait, hold on a second. You're the people who are developing the dApps that you expect me to trust my life savings with, and you're
Yeah.
acting like a fool in public. Like, oh
Well,
fuck.
that's what a lot of these conventions used to be. Is it was a bunch of retail just partying it up, because the early adopters made a bunch of money, and it was just a chance to get together and party. Institutions aren't interested in that shit.
No.
They are not going to show up to that kind of thing. And this recent Bitcoin conference, I think, is proof of that. The ones that showed up, they weren't. I've watched a bunch of video on it, and people aren't really talking about the price of Bitcoin. They're talking about what's being developed, when it comes to blockchain technology and what's being built, and what the future looks like. They're not focused on price, and their money, they're putting their money where their mouth is. We have huge inflows into ETFs. Institutions are buying up Bitcoin. They're buying up ETH. They're buying up these strong quality assets. They're not buying meme coins. They're not buying these tokens that don't serve a purpose. They're looking to build real products, real utility, not hype. They don't care what the narrative or the mind share is, unless they're doing a short-term trade where they're going to take your liquidity. That's just the facts. The environment is changing, and if you don't change with it, and that's kind of why I wanted to do this episode, is if you don't evolve with it, then you're going to be left behind. You're going to be left holding the bag. You're going to hold that bag of some trash coin for far too long, and everyone else is going to get out, and you're going to be sitting there in the echo chamber, in a Discord somewhere, with everybody talking about it's going to go to the moon. It's going to go to the moon, and the rest of the market's going to move, and that project probably won't. That's just the facts.
So Mike, if we bring it back to the Bitcoin cycle and what
Okay.
the Bitwise CEO was saying for a second there, so he makes a couple of interesting points. I think his name is Hogan. So he points to a handful of items here. Number one, you've got the "this time is different" fallacy,
Hunter
where
Horsley.
oh, okay, yeah. So maybe I was looking at someone else, but
No, no, it's fine.
there's a couple of different things here. So you've got we're always talking about, well, this time is different. Maybe this time it won't be different. Every cycle has had a "this time is different" narrative. I remember in 2017 we were talking about ICOs, and that was when we got Bitcoin futures and the institutional futures, and people were saying that the ICOs and the institutional futures, that's going to end the volatility. It didn't. And then in 2021, when you got the corporate treasuries with MicroStrategy and Tesla, people were saying, "Oh, it's going to prevent a bear market." It didn't. And then in 2026, you got these ETFs and Stretch STRC. People are saying that this has killed the cycle. Well,
But
that remains to be seen. But
to play devil's advocate, though, the market has flattened out quite a bit. That those massive pumps and early Bitcoin, and the first couple of cycles, it's becoming less and less and less over time. The more adoption there's, the more liquidity that enters the market. It's harder for the market makers, or those that manipulate the market, that flush out the longs and the shorts. It becomes harder and harder for them to do that. That's always going to exist, but I do think that a lot of this adoption, over time, is going to have an effect. It has to. To what degree can be debated. Absolutely, is it going to destroy the 4-year cycle? That also can be debated. But we can only go off of data. Because anything above and beyond historical data is just an opinion. And without data, it really doesn't hold a whole lot of weight. So
Yeah. So there are two things that I'm thinking about with regards to the Bitcoin cycle. Number one, firstly, is the ISM. That's a measure of manufacturing activity. It's in expansionary territory, and that tends to be positively correlated with Bitcoin parabolas. Okay, so that's number one. And number two is those Bitcoin ETF products and their effect on volatility, having compressed Bitcoin's vol from like 70% to 40%. So those two things together, if we want to be just completely analytical and just think about things without any emotion whatsoever, and we can say, hey, you know what? There has been a positive correlation in the past between ISM being in expansionary territory and Bitcoin ripping higher. Also, because Bitcoin's volatility has nearly been cut in half, that means that the drawdown should be much smaller in percentage terms.
Exactly. Exactly.
Yeah.
So I mean, that's about as far as I'm willing to go to agree with the Bitcoin cycle is dead. That's is that over time, yes, adoption and increased amounts of liquidity into Bitcoin and things like that is going to flatten the volatility. But I still think that there's for the foreseeable future going to be a 4-year cycle. It's just
Yeah.
there just is.
Yep. I
All
agree.
right. So I we just ran across this. I didn't find this before the show, but I just ran across this looking at other news. But crypto ETF boom continues with debut of a first fund to track Canton.
Hmm.
So the new ETF is the first in the U.S. to provide direct exposure to the native utility token of the Canton Network. The 21 shares Canton Network ETF follows a slew of altcoin ETFs that have launched over the past year. A new crypto exchange traded fund has entered the chat with 21 shares ETF on NASDAQ Thursday. It said the fund is the first in the US to provide direct exposure to Canton, the native utility token of Canton Network. So the ticker is going to be TCAN. The Canton Network is a privacy preserving blockchain ecosystem purpose built for institutional finance. Major firms like Goldman Sachs, Microsoft, and the DTCC back the chain's primary developer digital asset. The Canton Network has attracted significant institutional interest, giving its focus on privacy preserving infrastructure for capital markets. Um, let's see. Let's skip through a lot of the hype and the freaking yammering. Um, the U.S. Securities and Exchange Commission, which oversees ETF approvals, has adopted a more crypto friendly posture. We know that. So I guess that's it. It's just it looks like 21 shares is launching a Canton, a Canton ETF. So, I mean, that's I mean, actually, you know what? I'm going to ask you, David. Do you think that that's bullish or bearish? Because I mean, yeah,
I think it's bullish. I
okay,
think that Canton is. We almost need to think of Canton Network in its own like bucket, like because it's not a public chain at all.
yeah.
It's a private walled garden chain for built specifically for these massive institutions. And so, if I'm one of these big
Over the
institutions,
past decade, quietly, mind you.
right, right, and guess what? These institutions love it, and you know how you know that because
Because
they're
they're
migrating. They're migrating.
well, because they're adopting it in droves. They're launching
Right.
super validators. They're already moving to the tune of $2 to $3 million in fees per day. Is that's the amount of of volume of traffic that's on that thing already. So sorry, go ahead.
Yeah, but I don't see that on any public chain, right? I see that on Canton. And so Canton has been working, I think, to solve the tokenomics so that number can start going up on that CC token.
Are
And
you seeing anything on that? I'll be honest. I really haven't looked recently to I guess I could look.
yeah, well, I mean, why don't we take a look? So here's the thing with Canton. I could see this thing just like ripping, ripping, like really, really running. It just launched, and it seems as though it's just starting to gain some traction. I could see this thing trading for a couple of dollars. But what I would really like to do at some point, Mike, is put together a little bit more deep dive research specifically on the tokenomics of the CC token to try to
I
maybe
would
put
love
together
that.
some type of price prediction because this token, man, for that chain, if it's true, and it looks like it is true, that JP Morgan Chase and Goldman Sachs and a bunch of other big institutions are migrating their repo books onto Canton and Connexus, that volume is like multiple trillions of dollars every day. And
Well,
so
and you got
like
credit card companies that, I mean, the massive amount of transactions that happen on credit, MasterCard and Visa, and those credit card companies. You add that, you add the the repo market. You add that, it's just like holy shit. It's yeah. Anyway, sorry, go ahead.
yeah. So I think that that repo book transaction volume and all of the fees that are generated,
Mhm.
that we talk about flywheels a lot. So I kind of want to not describe it as a flywheel, but that activity generates a lot of revenue. If that revenue is used to burn CC tokens and the token starts to appreciate in value, I think it could really run. I think it could go from a couple of pennies to a couple of dollars, no problem. But I want to be able to model the thing though. So, in order to be able to do that, I need to put together a little bit more deep dive research specifically on the Canton tokenomics.
If we
So,
don't do
that
that
could be
today,
interesting.
let's do that tomorrow.
Yeah, we can do that tomorrow. I've got 3 pieces of content getting lined up for today.
Because I got some dry powder, and honestly, I'm itching to deploy it. And the place that I see being what I think is a good entry point, just because of how stable the price has been, is I just kind of wonder if maybe put it in now. And so I would
I
love to,
mean,
I'd love to, see your data, because I know that you're great at finding those entries. So I would love to see, some solid data to let me know. It's like, should I wait for a pullback? Should I just put it in there as like a savings account? It's, what should I
so
do?
I think it comes down to conviction. So, if you believe that over the
I'm
next several
heavily
years,
convicted.
well, there you go. So that means I would probably begin building a position now.
Oh, I
And
have a nice position. I just, I,
yeah,
but I want to move into a better position.
right. So then what you could do is you could, set buying levels for yourself. And you could say, hey, you know what? Over the next 6 months, I want to accumulate this size position. And this is the average price that I would like to be able to accumulate these tokens at. And then you just set buy orders for yourself and, dispassionately execute those buy orders. That's it.
I like it. I
Simple.
like it.
Yeah.
Well, I mean, in the past 24 hours, there's been $2.22 million dollars worth of fees burned. So, I mean, do the math. What is that, like 60 million roughly? For a month, like $6.66 million a month, or 666. Sorry.
What about $66 million a month?
Oh, just I'm trying to do math in my head, but 30 days in a month, times 2.22 million, that'd be around what, $66 million a month, roughly,
Something
in
like that.
fees in Canton that are being burned per month.
Yeah, but I think that that's really, really small compared to what it's going to be.
Oh no, absolutely. But I'm
Yeah.
just saying. I mean, this thing barely launched. Nobody heard of this thing. But I mean, before it popped up on RWA.xyz and already had $40 billion repo market, on it of TVL. And that was like out the gate. They had to come up with a new category on RWA.xyz. So, because it was basically Canton, that was, in a Ferrari, out in the front, just tearing up the track. And then you had a bunch of Volkswagen bugs, ETH included, on RWA.xyz that had, maybe like, couple of million, 10 million, $20 million worth of TVL in RWAs. So it was just, I mean, they weren't even in the same ballpark. So they literally came up, like, I'll show you, they literally came up with a whole nother category of represented. There we go. Yeah, see, look, they have distributed and represented. So if you look at distributed, you got a Ethereum at the top. Or
I
sorry,
like me. I like me some Ethereum, man. But here's the thing, though. Like, I want to make money, so I'm a little bit token agnostic here. Like,
yeah.
as much as I love Bitcoin for its decentralization, I
Mhm.
also really like Monero for its decentralization and privacy. And
Absolutely.
I like Canton because the fact that these big banks are moving all of their you know uh, tradfi business onto these digital rails, and Canton is being used to facilitate that. That tells me that once this volume really starts to ramp up over the next 24 months, like we're talking about the next 24 months, like this is the opportunity staring us in the face right now. Like, you got to be willing to make a commitment and get in now during a bear market. So, for
Well,
me,
you gotta buy while everybody else is selling. You have to you have to do the painful thing. It's
right.
sometimes the right thing is not the comfortable thing. I
Yeah,
95% of the time. Usually the easy thing is not the best thing for you. And that's not just in investing, that's in life. It's sometimes the most painful experiences are the ones that you learn the most from or that you gain the most from. I know that's been the case in my life.
agreed 100%. And, so what I'm thinking about here with these tokens is, how is a correlation with Bitcoin? How is that going to change over time? Are we going to start to see some of these tokens really decouple from BTC and start to trade on their own a little bit?
We've already kind of seen it with Canton and Tron and Hype and a couple of other ones that you've been pointing out for weeks, if not months now. Just that have been moving independently. While Bitcoin went down, they were going up.
Yeah, but I don't know. Like, I don't think the correlation has really broken yet. Just because there's a
Oh
handful of
no, but
tokens,
it's
like,
just. But I mean, before in the full retail market, it's everything moved with Bitcoin. I mean,
right.
there was almost no exceptions.
So, Mike, here's how we would know. So, if there's like a big down day for BTC
Yeah.
where Bitcoin and ETH dump like
Mm.
5, 7%, something like that.
Yeah, yeah, yeah.
If that happens and you look at Canton and it's flat or up, and you look at Tron and it's up, and you
Yeah.
look at maybe something else. But if you see Bitcoin and ETH dump and these other coins move sideways or go up, then you would really know that, hey,
Well,
the correlation broke.
let's look at it because I think that for to an extent has already happened.
Yeah, so I mean, this is just CC. This is the Canton
Yeah.
Network coin. If we go ahead and price this thing in Bitcoin terms, what you're going to see is, look, up and to the right, even though it's kind of, flagged off a little bit here. You got the pole, you got a little bit of a flag, even though it's flagged
Yeah.
off here over the last, what is this, last couple of months. That's actually quite interesting because, Bitcoin put in a top up here, or excuse me, a bottom. The bottom in Bitcoin was, in early February. And as Bitcoin has rallied since early Feb,
Mhm.
Canton has moved sideways. And so
Yeah.
that has led to Canton over the last couple of months losing value in Bitcoin terms. But if you just zoom out a little bit further, you can see that, okay, since year to date, Canton has gained value in Bitcoin terms. So this chart moving up and to the right means Canton gaining value in Bitcoin terms. There's only a handful of other tokens that really look like this. I
Yeah.
mean, you can
Tron.
take a look at Tron,
Yeah.
and dude, I hope you bought some Tron because
I did.
you didn't? No?
I did. I did.
Oh, you did. You did. Awesome.
Yeah. I bought
So,
some Tron. I bought some Tau. I haven't bought Hype, but just a small bag of Tau and a small bag of Tron. But dude, yeah, freaking Tau. Like I said, I'm up 25% on that.
So, what are some other synonyms for the word bag? Like a satchel,
Sack.
uh, a sack.
I got a sack.
Yeah, for the word bag. Yeah, so I mean, you got yourself a nice little satchel of some Tron coins over here.
Yes.
But Tron is
A
interesting.
coin purse. I got a coin purse of
You got a little
Tron.
purse.
Yeah, I got a little coin purse of Tron.
You got a coin purse. So, when I'm looking at Tron in Bitcoin terms, it's basically since the start of the Bitcoin bear, Tron has really started to outperform BTC. That's what this price action right here indicates to me. And so there's only a handful of others. You might take a look at hype in Bitcoin terms, but look, I mean, since December of 2024, if you bought hype in the middle of December 2024, it's done nothing but move sideways. Dude, there's one tiny little no-see-um flying around in here. And so I've been thinking about like buying a 3D printer so that I can build like a little device that would attract these small flying insects and then zap them. So
Dude, you don't need to do all that. Just buy one. They got the little black lights that attract them and it zaps them. Either that or a can of hairspray and a lighter.
yeah, I don't really want to go walking around this little beach house with like a fucking flamethrower. Like, nah. Um, but yeah, man, if you're talking about your sack or your pouch of Tron, or maybe your tote bag of Tron, or maybe you got a portmanteau, which is it's
A
a
duffel.
large suitcase that opens into two equal parts. Or maybe you got a duffel bag
There you go.
filled with your Tron, right?
Yeah.
But when I'm taking a look at hype, though, if we're talking about hype, the one thing for me about hype is that it's held its 200-day moving average. That's
Mhm.
bullish. That's a good thing. So this would be, an important level to watch. Also, this horizontal $20, there's a psychological importance there. Like big round psychologically important numbers tend to be important levels of support or resistance. And then if I just grab a trend line tool here and throw this down, something like this maybe, you know, hype has just been climbing this wall, just support, 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 and getting close to support again. So hype doesn't look all that bad. If we go ahead and price this thing in Bitcoin terms, well, then you can see that it did break out to fresh highs in Bitcoin terms and has held on to those highs. So this up and to the right pattern, this is outperformance. This is hype outperforming BTC. There's a couple of others that we could take a look at too. I want to actually take a look here, Mike, at TON. I want to take a look at TON. Now, I've always been a fan of Telegram, but
I know that
the
that was a huge thing, that Telegram and Tom, coming together.
yeah, so I mean, this is really good looking actually. This pattern here, where we got the big breakout above that 200-day moving average right there. So there's the October 10th flash crash low, which importantly was not retested on the downside. A
Mm.
lot of other altcoins retested that October 10th low or broke down below it. On did not. And now that it's broken out above this 200-day moving average, it's not like this was a small breakout. This is nearly a double over the last couple of sessions here. So, TON really starting to outperform just about everything else in crypto, over the last couple of days. If we go ahead and price this thing in Bitcoin terms, we're just going to go like this, BTC, USDT, and take a look at that. So we're just starting to see this perk up a little bit. Now, this could be viewed as simply a lower high. You definitely could view it that way. We've seen really sharp rallies in the past out of
Mm.
TON in Bitcoin terms that ended up just getting sold.
Yeah.
So, what I put together for later on during today's call is a bunch of research on TON. I want to take a look at the network itself, but I also want to take a look at two other pieces of research later on in the call today, Mike. I want to take a look at Zcash from yesterday. We didn't get a chance to go through that. And I also want to take a look at something called goblin cards. Goblin cards. So those are the three things I want to look at: Ton, Zcash, and Goblin. I think that those will be three really interesting pieces of content for us in the second hour. But taking a look here at Ton in Bitcoin terms, this is a nice pump. And so now I've got like, at one point I had like $1,000 on the Ton chain. I thought, I didn't touch it. Like I put $1,000 on Ton in like early 2024 and then like forgot about it. So I've got to dig up my Ton wallet and see like if any of that shit is worth anything now. But I'm pretty sure that it's probably not. I remember that there were a couple of decentralized exchanges on Ton. If I go ahead and just bring up DeFi Llama here real quick, and we just take a look at this. So here's Ton, very, very little locked in DeFi here. But okay, here we go. StonFi. Yep, I've got something I know on StonFi. I've got something on DDust. So I've got, some type of probably just full range liquidity with like meme coins on DDust and StonFi. So I've got to dig up that wallet and see if I can take a look at this stuff here. But as far as DeFi TVL goes, not a whole lot going on. If we take a look at the StonFi DEX, this is a DEX on Ton. And if I click through to the pools here, I'm pretty sure, yeah, Redo, that was the dog. That's the dog coin. It's saying 300% APR. These are full range pools, by the way. I think I've got liquidity in a wallet from like 3 years ago or 2 years ago in this still. And then Storm, I had something in, farm paused. Okay, great. And then Notcoin. I actually did really well with Notcoin. And then wasn't there that, there was like a squirrel, like a squirrel app? Oh,
Oh,
Jeton is
that squirrel, that peanut.
no, not Peanut. Peanut was the one that got murdered by the state of New
Yeah, but
York.
that was the squirrel meme though.
Yeah, there was a squirrel game on
Oh,
Ton where you like it's one of those viral tapping games where you tap the
oh,
squirrel.
I don't
Yeah,
know.
it was really hot, I think in like 2024, where you would tap this squirrel on your phone and you would get these coins, and then you could literally take those coins and swap them for cash. And so there were a lot of people in, third world countries where like all they did all day was tap this freaking squirrel. Uh, so like, yeah. And then you got Jeton, which is like a betting market. And then let's see here, just going down the list, trying to remember what these tokens are. So Jeton, Notcoin, whatever that squirrel was, Hamster Combat. That was it. Remember Hamster Combat?
I don't.
Oh my God, Hamster Combat, dude. That's what it was called. So yeah, I've got some liquidity over here on StonFi. It's like a shitty DEX. And then if I bring it on back over here to DeFi Llama and we take a look at DDust, I think I liked DDust better. But take a look at that TVL. Man, it went from nothing to like 380 million back
To
down to
nothing.
nothing.
Yeah.
That's so crazy. Maybe we'll see another Ton season. I kind of doubt it though. And so
There's only a couple of chains that I'm comfortable deploying liquidity on. It just seems like that a lot of these, like during bull markets, that they do well, and when the bear market comes, the liquidity is pulled out of the market or it's moved to more established, more institutionally adopted chains like ETH and things like that.
look 100%. And for me, I put $1,000 on these two dexes like 2 years ago.
Yeah,
I bet I'm down 99% on that. Like probably.
I'd be interested to find out.
Me too. Me too. I need to. What I need to do is dig up that particular wallet. But yeah, not Scoot. Yeah, man. I went degen with the meme coins on Ton because back in 2024 I thought that, hey, if I could do like a 50 or 100x on the $1,000, that'd be pretty cool. It didn't play out that way though. So
You know what? It's all it takes is one. It's like, and if you're just using, a small bag, if it's 1% or less than 1% of your portfolio, or you're just using some yield that you earned that week or month, it's kind of like you're gambling with other people's money. At that point,
gambling with house money, sure.
yeah, and
And
that's my favorite way to gamble. I mean, it's usually when I actually gamble, like when I play 21 at a casino, I have, whatever I'm willing to lose, my entertainment money, and I'm getting my free drinks, I'm meeting new people and, laughing and joking, having a good time. And, if I lose all that money, cool. It's the price of entertainment. If I, as I'm winning though, then, those winnings, the house's money is going back in my pocket until I have my original investment. And, usually I'll just keep on taking my winnings. And once it goes into my pocket, it never comes back out. And so once my initial money is gone, then I just walk away. And honestly, it's worked well. I've never left the table with less money than I started with, and I've gotten free drinks and had a great time. A couple of times I paid for my whole trip. Hotel, food, everything. So yeah, it's just
it's
but
really,
you have
it's
to have that.
really, yeah, no, I agree with you, Mike. I think it's really comes down to mindset. And like you have the right mindset going into these places because when you walk into a casino, like you have to go in with the understanding that you don't have an edge. Unless
Those
unless
places are not built by losing money.
unless you're playing against other players, like
Mhm.
playing, poker or something like that.
Yeah, if you're
Or
playing like Texas,
maybe
you know,
I
yeah,
think I think that maybe Pai Gow, you might have like close to 50-50 odds in Pai Gow.
your
Um,
best odds I've been told is Pai Gow, blackjack, and roulette.
yeah, so I mean, look, I walked into the Ton Casino and I lost my money, man. That happens. So I definitely want to take a look at Ton later on today, though. I think that'll be interesting to learn about it once more. But
All right.
I walked in with the understanding that hey, this is the amount that I'm willing to lose, and that's it.
Yeah.
So yeah, pretty
All
simple.
right. Well, we got 7 minutes. Let's hit this last news topic. So it looks like Amazon Web Services. Here, let's do this. Amazon Web.
AWS. Mhm.
Yeah, they tapped Coinbase and Stripe to power USDC payments for AI agents. So they've partnered with them to execute transactions, AI agents to execute transactions using stablecoins. Coinbase said developers will be able to create agentic payment solutions that allow AI agents to make micropayments using USDC stablecoins. Amazon Web Services has partnered with Coinbase and Stripe. Um, One of the clearest signs yet that big tech is embracing blockchain based payment rails for the emerging agentic economy. On Thursday, Amazon Web Services unveiled Amazon Bedrock Agent Core Payments, a new set of features built to enable AI agents to instantly access and pay for what they use, such as web content, APIs, MCP servers, and other agents. The company said in a statement, "We built these capabilities in partnership with Coinbase and Stripe, who are providing the wallet infrastructure and payment rails that power the first set of capabilities." Coinbase also published a statement saying developers will be able to create agentic payment solutions using the X402 protocol, which allow AI agents to make micropayments using USDC stablecoins. USDC issued by Circle is Coinbase's stablecoin of choice. Like the Solana Foundation solution released last week, providing agentic access to Google Cloud services, AWS's new solution will enable AI agents to built on Amazon Bedrock Agent Core to make real micropayments to pay for services and access APIs by using a Coinbase or Stripe powered wallet. So this I find interesting because I'm willing to bet a lot of this is going to be on base, and potentially I see the potential to where a lot of this, if could liquidity potentially could flow through things like Aerodrome.
So check this out, Mike. As
Because
you were speaking,
Aerodrome is being touted as the liquidity hub for Base and Coinbase and all that. So if there's swaps going on or anything like that,
look, I know I think that Aerodrome, especially with the upgraded tokenomics, I think that Aerodrome is going to be a liquidity hub on the base chain for not just the Coinbase wrapped tokens, but for all of this agentic commerce. I think that Aerodrome is going to be one of the big winners over the next couple of years on the base chain, especially if most DeFi ends up living on one or two layer twos and on Ethereum. That's a potential future. But look, there are still a lot of potential futures. This is super interesting to me, though. Now, here's something that it came to mind as you were speaking, Mike. What do you think tax authorities want to do with agents that make payments? They
they
want
want
to
they want
tax
sales
that
tax.
shit.
Yeah, oh,
They
of
want to
course.
they want
They
to
want
tax that
to
shit.
they
And
want
so
their fucking hands in everything.
And so as you were speaking, I was just doing a little bit of research on that. And, as of right now, mid 2026, it's no longer that the IRS and OECD are just thinking about it. They're not just preparing to audit these payments, they're deploying their own AI agents to do just that. And like, so there's this non personhood principle. So the most important legal distinction in 2026 is that these AI agents are not recognized as taxpayers. So under current IRS guidance, an AI agent is treated as an electronic agent, similar to like a vending machine or something like that. So all income generated or expenses paid by the agent are attributed to the legal person or entity that owns or controls the agent. And so the
Yep.
wallet is an identity. And tax authorities now treat a crypto wallet as a reporting anchor. So if an
Yep.
agent with a wallet makes a payment, the tax liability falls on the human or corporation that holds the private keys to that wallet. Now, we need, just as a society, to start looking at laws like this and rejecting them. We can't just say, "Oh, that's the way it is," and it's just just taxes. That's just you just got to do it. Fuck that. Like, this is wrong. And dude, like, there was a revolution fought over like a less than 2% tax on tea. Okay. Like, come on. Like, where are your fucking balls? Like, grab a hold of your balls and say, fuck this. This is bullshit. We
Yeah.
should not have like some silent partner that's just going to peer into every transaction that you ever make and steal from you. It's wrong, man. It's wrong. And so now you've got this micro payment complexity with like these new forms and this AI agent. Let's say an AI agent makes 10,000 micropayments of 5 cents each in a single day.
Yeah.
So how does that reporting break down? Well, you're going to have to file, form 1099 DA. And then, these payments are less than $600, but there's a cost basis. There are potentially capital gains on this. Maybe there's a realization event. The tax software has to evolve to roll up these millions of microtransactions into single summary lines so that you can avoid filing 5,000 page tax returns. Dude, this is all just bullshit. It's all bullshit. Like,
Yeah.
our money is fiat, bro. Like, our money is printed by fiat. It's not fucking real. So like, who are these authorities to come in and say, we need to look through everything that you've done and we need our pound of flesh, or we're going to send armed men to your house and throw you in prison? Bro, that's extortion. Okay.
They only have the power that we give them.
Well, there's too many bitches out there who just
Yeah.
like acquiesce, man. Like,
Well,
seriously.
and maybe that should be the topic for tonight is taxes. for the red pill.
Bro, honestly, I don't even want to talk about it. Like even just like ranting and raving over the last couple of minutes here is almost too much, because like I, it's just
I
like you don't
honestly,
have anything to gain.
I think it needs to be talked about. I think that it needs to become like this like noise that it needs to be a narrative. It needs something. It needs to go viral. Between property taxes, sales tax, income tax, the fees and that you pay for your vehicle. It just hell, in some states, to freaking go to the national, just to go out into public lands, you have to buy, these passes. Like I know in Washington State, you have to, purchase a pass to go and use public lands that your tax dollars pay for. You buy, gas at the tank. There's tax per gallon. It's just like everywhere you go, you're getting freaking bent over, and not in a
Yeah,
good way.
getting fleeced.
Yeah,
Getting fleeced and then being told, "Just pay your fair share." Well, my fair share is 0, motherfucker. Like,
yeah,
that's my fair share, and you know what they mean by that when they say fair share? They mean more. The fair
yeah.
share is always gonna be more. It's
Oh
never
yeah,
gonna be less ever, not
yeah.
ever. And so
Well,
when you
well, and,
see, like
and I don't know if you ever noticed, and I really think that this might be the topic for tonight. But
Sure, yeah.
whenever they come up with like this existential crisis, this like COVID or global warming or climate change, all that stuff, it seems to always boil down to we need to take more money, to fund these things, to combat these things. It's
Yeah,
and
it's always saving the children. You're gonna
Yes,
save the children. Dude,
absolutely.
the shit's not real. The money's not real. It's printed by fiat. It's not hard money. It's not
Yeah,
real. And we are slaves in this matrix of a system. It's a tax slavery system. That's
yeah,
what the matrix is in Western democracies, the ones that still exist. I'm not quite sure that you can even call many of those countries in Europe democracies anymore, or even
mhm,
Western anymore. They're definitely losing their way. It looks as though they've gone from socialist to quasi communist at this point.
yeah,
And, I mean, it's really, really a shame. And when I read about like these micropayments and the substantiation and withholding and calculating a cost basis, and I just think to myself, for what? For what? Like, why do I have to go through and report what my
well,
agents did? Like, that's
I
bullshit.
I think a bigger question is what are we getting for all these taxes that we're paying?
Nothing.
I
Nothing.
mean, from either point of view, left or right, have you gotten universal health care? Have you, what services
But
are
do
you?
you even want it? Like, that's a so all of
I don't,
I don't.
but from different points of view, it's like, okay, the average, American is paying about 40%, after everything's said and done, income tax, gas at the pump, sales tax, just everything added up,
So
property
you
tax,
are a tax slave. If you're
you're a
paying
tax slave.
40%
And
of your income,
the government is taking that much of our money, trillions and trillions of dollars a year, they're taking from us. And what are we getting for it? And
nothing.
I don't care whose money it is. You want to give them more? I don't care if it's the
And
rich people until they can figure out how to spend this shit properly. I don't think they should be getting shit.
I don't think we should be paying any taxes at all. And healthcare is not a right, okay? Like
No,
if I'm
it's not. But I just
it's not.
that's what the
No,
left
I
likes,
know that that's what they
and they're the
say,
ones
but
that are screaming, the fair share and all that.
they want to steal from us productive people in
Yeah.
order to give free shit to freeloaders. That's
Well,
basically
it's
the
how they pay for votes. Basically, they force us to pay for their voting base.
That's basically what it comes down to. And if only there was like ID nationwide, you needed to show an ID
All
in
right.
order to vote.
I don't want to burn through. I know you have a lot of good content. Oh,
Yeah,
this
I
is going to be
do.
nice. This is going to be
No,
tonight.
it'll be fun. We'll have a great time tonight.
Yeah.
Yeah,
So tune
yeah,
in tonight where we're going to talk about fucked ass taxes.
that's
So,
right.
all right, David, take it away.
Okay, so why don't we hop in here to Notebook LM? And let's learn a little bit about some privacy coins first. We didn't get a chance to take a look at Zcash yesterday. So I want to go ahead and play this content on Zcash. And then from here, I've got two other pieces of content ready for you guys. After Zcash, I want to take a look into TON. I want to learn a little bit more about the TON tokenomics. It's been a couple of years since I've really jumped in and learned about TON. And then from there, I want to take a look at something called Goblin. Okay, so Goblin cards. And anyone who wants to take a look at that, before we get started on it, I think that the URL.
Jeff.
Yeah.
Rabble, 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 rabble. Rabble, rabble, rabble. They took our taxes.
So Jeff, I've been able to programmatically make really good music using Suno. And dude,
Jeff needs to check the Slack channel more. He doesn't
well,
check very
often. I'm just saying that I've been able to make this stuff, and what I want to do is I want to like put it together into a set, and like I can figure out how to do that, but I kind of want to just like see what Jeff thinks about the set though.
Well, he's our resident expert on music, so yeah.
Right. Okay, so here let's get started on Zcash. And Mike, just let me know if you can't hear it.
Traditional public blockchains broadcast every account balance, transaction history, and behavioral pattern to the open internet. But as institutional capital enters the decentralized economy, absolute financial encryption is no longer an ideological preference. It is a strict operational requirement. Launched in October 2016, Zcash originated as a highly modified fork of the Bitcoin protocol. Its engineers stripped out Bitcoin's SHA-256 hashing algorithm and overlaid a massive suite of zero-knowledge cryptography to obscure transaction histories. For years, the asset maintained a narrow reputation as a pure privacy coin. This single-use identity invited aggressive regulatory hostility, sparked a cascade of global exchange delistings, and drove a severe 98% market drawdown. By 2026, that trajectory completely reversed. Zcash surged past a $10 billion market capitalization, absorbing massive institutional inflows and overtaking legacy competitors in global trading volume. The protocol did not survive by remarketing its legacy features. Instead, its developers executed a massive mid-flight architectural deconstruction, systematically overhauling the network's entire cryptography, its core tokenomics, and its consensus mechanism. They eradicated the systemic risks of trusted setups, engineered a cryptographic solution to the global compliance paradox, and initiated a permanent pivot away from proof-of-work mining toward a yielding, decentralized finance layer. The network now functions as a foundational privacy layer for the broader digital economy. The mathematical engine behind Zcash is the ZK snark. It allows a sender to mathematically prove that they hold valid funds, and that transaction inputs perfectly equal outputs, without ever revealing their own identity, the recipient, or the specific transfer amount. This diagram shows the dual address system. Transparent T addresses function like Bitcoin, leaving amounts visible. Shielded Z addresses utilize zero-knowledge proofs, locking inputs inside an encrypted shielded pool. Users can move assets between environments, allowing seamless interaction with centralized exchanges lacking advanced cryptography. However, a 2018 academic study presented at the VanEck Security Symposium revealed a severe structural flaw in this opt-in design, known as heuristic linkability. This chart illustrates the behavior of network miners. Protocol rules force miners to initially shield their newly minted block rewards, but researchers tracked miners immediately withdrawing exact equivalent amounts back to the transparent ledger to deposit onto exchanges. By analyzing these temporal and quantitative correlations, the study successfully linked up to 88% of all transparent to shielded bridging transactions straight back to their pseudonymous users, without ever breaking the underlying ZK snark cryptography. The data proves the operational risk of opt-in privacy. If a user carelessly bridges funds using transparent infrastructure, they completely forfeit the network's mathematical guarantees. The original implementations of ZK snarks carried an existential risk. Initializing the network's complex mathematical parameters required a multi-party computation ceremony, commonly called a trusted setup. This process produced what cryptographers call toxic waste, underlying cryptographic fragments that, if successfully colluded and reconstructed by the ceremony's participants, would allow malicious actors to counterfeit an infinite supply of Zcash without triggering any network detection. In May 2022, Network Upgrade 5 activated the Halo 2 proving system to permanently fix this centralized vulnerability. Halo 2 completely eliminates the trusted setup ceremony using inner product arguments. To prevent network bloat, it utilizes nested amortization, a recursive composition that compresses massive amounts of computational data into a single verification step. A single Halo 2 verifier checks a proof that itself verifies another proof, creating a recursive chain that aggregates transaction validity across the entire history of the blockchain into one lightweight piece of data. This upgrade permanently neutralized the systemic risk of infinite inflation and established the architectural foundation for massive Layer 1 scalability. Global financial authorities have orchestrated an aggressive regulatory tightening over the past decade. Frameworks like the European Union's MiCA regulation and the FATF travel rule now mandate that digital asset platforms collect and verify the originator and beneficiary data of all cross-border transactions.
Okay, now why in the world would they do that? The only reason why these authorities do stuff like this is to steal from you. That's the only reason. They say it's KYC, AML. That's a bunch of bullshit. The reason why they want to track who you're sending money to or receiving money from is so they can dip their hand in and take it. That's the only reason why.
Mandatory privacy networks like Monero are structurally incompatible with these audit requirements. Their rigid architecture blocks any compliance efforts, resulting in sweeping global exchange delistings. Zcash engineered a proprietary solution to this paradox through selective disclosure capabilities known as viewing keys. In a fully shielded address, the spend key authorizes funds transfer. Alternatively, a viewing key generates a read-only data table, revealing transaction amounts without granting asset control. Compliance officers use viewing keys to satisfy FATF audits and securely prove asset origin to regulators. This highly nuanced technical capability allowed prominent Asian and Middle Eastern exchanges to quietly resume Zcash trading operations throughout early 2026, satisfying strict local anti-money laundering obligations. Zcash proved that mathematically perfect base layer privacy and rigorous institutional compliance are not mutually exclusive features. Network Upgrade 7 establishes the architecture required for a multi-asset environment. The core feature of this upgrade is Zcash shielded assets. The protocol now allows developers to execute the permissionless, on-chain issuance of custom tokens. Users can issue fiat-pegged stablecoins, wrapped representations of Bitcoin, and tokenized real-world assets.
Okay, so this is really important. ZSA, Zcash shielded assets. We're starting to see a couple of these chains release upgrades like this. So on Bitcoin, a couple of years ago, you got Taproot assets. And if we get covenants on Bitcoin, then Taproot plus covenants on the Bitcoin layer 1 means true DeFi on Bitcoin layer 1, not on the Lightning layer 2 or some other layer 2, on the layer 1. On Zcash, we've got this ZSA, Zcash shielded assets, which allows you to essentially mint a stablecoin, a tokenized RWA, maybe tokenized BTC on the Zcash chain. So we're starting to see a lot of these chains, move in a similar direction where you can mint other assets on top of the base layer. Really, really interesting.
All of which automatically inherit the exact same zero-knowledge privacy guarantees as native Zcash. This diagram illustrates the resulting tokenomic shift. Every private transfer, minting, or burning of a custom asset requires the expenditure of native ZEC to process the transaction fees. By housing all of these custom assets within a single unified anonymity pool, the network massively increases its overall privacy set, deeply obscuring metadata and rendering heuristic analysis nearly impossible for surveillance firms. Shielded assets designate ZEC as the mandatory, constantly consumed utility fuel for a private digital economy. The final architectural hurdle is the network's legacy Equihash proof-of-work consensus. Mining operations generate constant fiat sell pressure to cover their electricity costs, and in 2023, the hash rate centralized to the point of briefly exposing the network to a 51% attack. To rectify these economic and security leaks, developers introduced a phased transition known as the Crosslink protocol, establishing a hybrid proof-of-work and proof-of-stake model. Crosslink introduces a trailing finality layer. Miners continue to construct the actual blocks using specialized hardware, while proof-of-stake stakers act as notaries. These stakers cryptographically sign off on the constructed blocks, providing absolute economic finality and physically protecting the chain from rollback attacks. This chart shows the proposed economic balancing act. The newly minted block reward subsidy is divided exactly. 40% is directed to the miner node, 40% is directed to the staker node, and the remaining 20% is diverted into a decentralized lockbox treasury to fund ongoing ecosystem development. Staking on a privacy network requires rigorous parameter engineering. Crosslink mandates fixed 10-day unstaking windows and forces all staked amounts to be rounded to standardized mathematical increments, such as exactly 10 or 100 SEK. These rigid staking increments prevent blockchain surveillance firms from tracking specific users through highly unique granular delegation patterns. The Crosslink protocol solves the network's structural economic leaks and centralization risks of the legacy network, while enforcing absolute user privacy directly at the consensus layer. Starting from its legacy 2016 Bitcoin codebase, the protocol has been entirely deconstructed and rebuilt from the ground up. This diagram shows the complete visual model of the new architecture. First, the foundation is secured by the Crosslink hybrid consensus. Next, the dual pool ledger stacks on top. This is secured by the trustless Halo 2 prover engine. Finally, the ZSA programmable layer caps the stack, bringing massive multi-asset utility to the ecosystem. This vertical stack neutralizes the network's historical vulnerabilities. It eliminates toxic waste, bypasses heuristic tracking, and bridges perfect cryptographic privacy with strict institutional compliance. Competing privacy protocols that refused this kind of rigorous architectural evolution found themselves completely isolated from global liquidity and outlawed by major jurisdictions. By contrast, this comprehensive overhaul allows Zcash to safely absorb institutional capital while providing a highly secure environment for on-chain asset issuance. The protocol has systematically engineered itself into the definitive, privacy-preserving infrastructure layer for decentralized global finance.
Wow. So Zcash is a really interesting protocol. Yeah, I still have never operated natively on the Zcash layer one, but I would very much like to. And maybe what we can do at some point, maybe not tomorrow, Mike, but maybe sometime next week, is I'll pick up like a Zcash wallet, and we could, maybe send some Zcash back and forth. I've never used it before, so that could be interesting. Yeah. Okay. So now that we've gone through and just learned a little bit about Zcash, I want to go ahead and hop in and take a look at TON, because if we're over here just taking a look at the price performance of TON over the last couple of sessions, in the past 4 days, TON has taken off like a rocket ship, up from trough to peak, 115%. As of right now, sitting up around 90%. So this is one of the best performers, week to date in crypto is TON. So what I want to do here is I want to learn a little bit more about TON. In order to do that, why don't we start actually by going through the slide deck, because I'm actually waiting for the video content to finish generating. In fact, since we're still waiting for the video content to finish generating, why don't we take a look first at Goblin? I wanted this one to be the last one, but we'll make this one the second to last, and then we'll do Tom last. We got 40 minutes left, so we'll have plenty of time. So the reason why I'm so interested in Goblin is, these on and off ramps, but specifically the off ramps, like being able to spend your assets in real life without asking permission, that's important to me. And so Goblin is a non-KYC fiat off-ramp, okay? So this is really, really cool. We've been talking a lot about privacy chains, privacy coins, like Zcash and Monero and Dash. We've been talking about, how to protect yourself. And what I really want to shift into here is how do if you're going to swap between these assets permissionlessly using something like Thorchain, well, how do you go from swapping or protecting your identity, protecting your privacy, to being able to spend those assets in person with a non KYC fiat off ramp? How do you do that? So take a look at this. This is kind of interesting. I want to go ahead and take a look at Goblin cards and the architecture of this regulatory arbitrage. So Mike, let's check this out. So you've got this global compliance apparatus. You've got those fat fuck mandates. You've got the EU MiCA regulation, those commies in Europe. You've got biometric KYC, where people want to know your blood type and your mother's maiden name so that they can steal from you.
Yeah.
And then there's all these chain analysis firms that are going to audit your ass, right? So this is the global compliance apparatus. It's all designed to steal from you. And then you've got this fiat liquidity bridge. You got this counter economy. You could think of it almost like a parallel economy where you've got decentralized assets. You've got nomadic capital that can go where it wants. And you've got privacy protocols like Zcash and Monero that we've been talking quite a bit about recently. So mainstream crypto to fiat conversion now requires full integration into traditional banking surveillance. So fuck that. And for privacy purists, accessing liquidity at a physical point of sale without triggering algorithmic identity verification, this is the sector's most complex challenge. So let's learn about how Goblin solves for this. So here's the target demographic. We want to bypass that traditional friction. Here's the persona. You got the perpetual traveler or the cypherpunk. They've got crypto liquidity. They are not stuck in one jurisdiction, and they're a privacy maximalist. Okay, this is us. This is us. If you're watching this content right now, this could be you too. So this is definitely us. And here are the traditional banking pain points, right? So if you are one of these types of people, then it can be kind of difficult sometimes to provide a localized proof of address. And these algorithmic fraud declines while traveling are really, really annoying, let me tell you. All this cross-border reporting friction with all this nonsense. And then you've got extortionate Forex spreads. This is all extortion, all of this, by the way. And then the market cap. So fully compliant crypto cards, like those issued by centralized exchanges, like the Binance card, the Crypto.com card, the Coinbase card, they require these exhaustive dossiers on their users, selfies, continuous transaction monitoring. Yeah, I mean, fuck them. And then you've got peer-to-peer cash exchanges that are like really inefficient, but also really dangerous. Like, Mike, can you even imagine if you had, even just one BTC, just one, right? You want to sell it peer-to-peer in person.
Mm-hmm.
Like, dude, what? You're going to go and meet someone like to receive 80 grand in cash in a public place? No way. That's insane to me. So you got the strategic jurisdiction, right? So what is this? The Mexican arbitrage triangle. What is this? So it looks like Goblin. So maybe choosing Mexico as a calculated maneuver to navigate the logistics of global card shipping while maintaining distance from aggressive Western regulatory bodies. Okay, so it looks like their operational base might be in Mexico. Huh. So it says it operates under developing fintech law. It's outside direct US, FinCEN, and European Central Bank enforcement perimeters. Awesome. I love it. And then, okay, here's a regulatory threat. So MiCA is criminalizing.
Of course.
Of course.
It's got to be something that works in our favor if they're criminalizing it.
Right, exactly. So if they want to make speech illegal, it's because it's speech that speaks the truth. if they want to make, non KYC financial instruments illegal, it's because they can't steal from you. Okay, so MICA is criminalizing non KYC financial instruments. Of course they are. And then, so the target market says nomadic hotspots, proximity to massive North American expats, markets for physical logistics. So, they're targeting, it looks like Southeast Asia. And that makes a lot of sense because that's where all the people who use crypto daily are anyway. So if they operate out of Mexico under some, bullshit Mexican fintech law, and then their target market is in Southeast Asia, that makes a lot of sense because that's where all the customers are. The expats who have money and spend crypto daily, who live in Southeast Asia, that makes a lot of sense to target that audience for sure. So here's the physical infrastructure. Untethered utility. Okay, so the layer one, the network, they've got a MasterCard integration granting near universal global acceptance at point of sale and ATM terminals. Now, at some point, we've got to get away from MasterCard and Visa. Like, we need native Bitcoin payments where people demand to be paid in Bitcoin, not in dollars. And I think that once we get to that point, then you're no longer going to care about MasterCard or Visa. So here's layer two, the tech. You got the EMV chip, you got contactless tap. Yeah, that's great. You can tap to pay, that's convenient. And then this is just the actual card itself, it looks like. And then it says layer three, the privacy. It says it's a no-name plastic card that ensures physical plausible deniability at checkout. That's so cool, man. No-name card where you can just tap to pay in person. I love that. I love that. And so here's the software bypass. You got the Goblin app, which is an Android APK, or you can run the web app. So that means no Google, no Apple. Good riddance, Google and Apple. And then you got it to the direct user device. So it bypasses those centralized storefronts to prevent, corporate deplatforming. I love that. I love that. These Goblin guys are great. Okay. Asset bridging, the utility versus anonymity matrix. Okay, so anonymity and privacy and transaction velocity. Okay, so BTC, foundational storage, low velocity, high visibility. That's true. Monero, absolute privacy standard. They just upgraded those ring signatures to FMC, whatever it is, plus plus. So they had a big upgrade recently, Monero did. Ethereum and Solana, of course, DeFi on Ethereum, DeFi on Solana. Then USDT. So yeah, this is the dollar peg stable, but it's entirely transparent and it can be frozen. So here's the takeaway. Supporting Monero is an uncompromising commitment. So mainstream exchanges are delisting Monero due to compliance pressure, but Goblin provides a direct fiat bridge for Monero, one of these opaque ledgers. I wonder if they do for Zcash too. So here's the convenience trade-off. Incompatibility with mobile wallets. Well, who cares? You don't need to use a mobile wallet. You have the physical card. So mainstream architecture, you've got your smartphone device with Apple or Google Pay, and you tap to pay, and then it's going to be linked to your identity, and then some fucking tax authority is going to say, "Hey, we need money."
Send you over and
right,
read you out. And,
exactly. Like that. That's not fun. But
well,
here's
I'm not judging if that's your thing, but it's not my thing.
Fuck that, dude.
Well, honestly, I kind of wonder if some of these people, if it's like a fetish form, like a financial fetish form or something like that, it's almost like they enjoy, getting their money, stolen by force from the government.
Nah, people just don't think for themselves, and they're half retarded, most of them, I think. So here's the Goblin architecture. You've got that physical piece of plastic, the MasterCard network, no linked identity. So Goblin cards deliberately sacrifice mobile contactless integration because passing that identity-based step-up authentication is fundamentally incompatible with strict non-KYC architecture. This is what I love, non-KYC architecture, man. This is great. So here's the OPSEC. There are limits to anonymity, apparently. So the card is anonymous, but the person holding it is not. So your network traffic, your IP address could be exposed. The funding phase, depositing crypto, so sending Bitcoin directly from a KYC exchange like Coinbase, would allow chain analysis to link that BTC to your identity. Okay, so that would be bad OPSEC on your part. And then physical delivery of the card. So if you have the card sent to an address in your name, well, then all of a sudden that card can be doxed to your identity. And then the retail usage itself. So if there's video camera footage of you using that card in person at a physical point of sale terminal, well, then that transaction can be doxed to you. So OPSEC is your responsibility, but you've got to know, the different attack vectors that these agencies are going to use to dox transactions to you. And if you
Dude,
are unfortunate enough to live in Europe,
well, and then
yeah,
if you use that card on your cell phone, if you use it like make a payment on on the web, your IP address, your SIM card, and your phone, it's just it's so complex these days. If you're wanting to be truly sovereign, the waters that you have to navigate are just too complex. And that's why I know David and I are and he's kind of orange pilled me, so bullish on Bitcoin and things like Zcash and these privacy tokens, because it's really the only tool that we have that isn't like a physical revolution to take back our self sovereignty.
and you got to think to yourself, Mike, like, what if you were unfortunate enough to live in communist Europe where they're criminalizing privacy? So
Yeah.
you would be forced to think about OPSEC daily. You
Well,
would be forced to.
and your day-to-day life could be affected, because I mean there's some places where they're talking about these social credit scores, and I mean we've already seen it in Europe and the UK where you make a post on social media and it's considered hateful or whatever. People are getting thrown in prison for making a social media post saying that immigration, speaking out against just un you know un unfeathered, whatever, basically just the unchecked mass immigration of foreign military aged males, where it's affecting people's livelihoods. They're living off the system, and there's elevated levels of different types of violence. You can't speak out against it, or you're thrown in prison. All
Bro,
of this is tied together.
they're importing black people and Muslims to rape their citizens, dude. That's what they're doing.
That's
So here's the next thing.
happening. I mean,
Yeah, I mean, look, if you want to be able to call a spade, that's what's happening. And the people at the top of those government structures in Europe who are facilitating that's exactly what was happening here in the United States under Biden. Like, I think that across all Western
well,
democracies, this stuff
here in
has
the
been
U.S.,
funded.
I mean, look at all the fraud that was going on with the the Leering centers, and the elder care and stuff like that, where there was no kids, there was no elders, and it's billions and billions and billions of dollars of tax dollars, and it's all run by the Somalis that were imported into
Right,
Ilhan Omar's district. That's the
right.
only reason she's in office. Can't even read a freaking script. World War II, she reads it World War 11,
Yeah.
and it's just
But
it's almost
all
like
all that all
it's
that
some
fraud,
weird freaking reality show.
it is, man. But all that fraud, Mike, it's been decades in the making. Like, this is not
Oh,
something new, like
well,
the
it's
only
just the
the
tip of
only
the iceberg.
reason, yeah,
It's
but
just
the
the tip
only
of the iceberg.
reason
And
that
the sad thing is, it took a private citizen, a kid,
Nick Shirley, man, a 22-year-old guy,
with
like,
social media, a cell phone, and and some freaking motivation, he was able to uncover it.
yeah.
So I'm sorry, but either the media is totally inept, or they're not
No, no,
doing
no,
their
it's
job.
worse. It's worse than that. It's worse than that.
Oh,
They're
they're the
literally
propaganda arm. They're the
the,
propaganda arm of the government.
what was it called in Soviet Russia? Pravda, right? That was
I think
the
that's
name of
what it
their
was.
that was the name of their rag, right? That was the name of their like media apparatus. And
Yeah.
that's where I think the word propaganda was created in the 1940s, right? during World War II, or was it after World War II? I don't
I
remember.
think it was after World War II.
So look, I mean, what we've got in
Well, they even had like
Western.
ministers of propaganda. I mean, they don't even try to hide it.
Oh
It's
yeah, yeah. Well, I mean, like that's what all Western media is now.
yeah.
Unless you are literally, unless you're consuming content that is video on the ground that day in one of these cities where you
Oh,
can
and
view the receipt. Like,
well,
unless you're
and
on
Fox
X
News
watching this
included.
stuff, it's not real.
It's
Yeah,
not just CNN and MSNBC. It's
it's
Fox
all
News.
of
It's
them.
right and
It's
left.
every single one.
Yeah, it's all of
Yeah.
them.
It's all of them. And so, like, the only way that you can consume information now is literally on X, and you got to be able to see video content on the ground in the place that you're interested in learning about. Like, if you want to, learn about what's going on in a town in Europe, or a city in Europe, or a town or city in the United States, or literally anywhere in the world, you've got to go and search that information out for yourself. Because what you can
Well,
be
and you've got to
100%.
put some effort because they're still on X and stuff like that. There's still a lot of
Oh
AI
yeah.
generated
Oh
stuff.
yeah.
So I mean,
Oh yeah.
it's the days of just being able to pop on the TV and watch what's going on in the world are over.
Yeah, it's
You know,
been over.
yeah.
So here, let's bring it back over here to Goblin for a second. So this is the MasterCard firewall, backend AML compromises. So whenever I see KYC AML, I think theft via taxation. So you've got this aggressive MCC block list. What does this mean? Okay, so it says to prevent the immediate revocation of their bank identification number, Goblin enforces aggressive merchant category code blocks. Fuck. So, like, you can't use your Goblin card at a bunch of places. Well, I mean, for me, like, I don't, I would never use it really at a casino. I don't buy drugs, so I wouldn't obviously use it for that. I would never use it to send a money transfer. And, I wouldn't use my Goblin card to buy crypto. The whole point is to spend crypto. So maybe this isn't that big of a deal specifically for me, but for some other people, I'm sure it could be. So blocking crypto purchases is a critical anti-money laundering measure. Of course it is, because if citizens could escape these fiat systems by buying digital assets, that would mean that they're no longer enslavable. Okay, so that's why
And
they make this
it's
stuff
much
illegal.
easier to launder money with cash with fiat.
Dude, it's easier to money. If someone wants to learn about the history of that, like, just read about gold, read about hard cash. Like, that's what's used actually. Um, okay, the economic architecture, capitalizing the risk premium. So you got a little bit of a barrier to entry. It looks like a $350 upfront issuance fee. Okay, great, awesome. And then what the fuck? 3.5% crypto deposit spread? Dude,
Yeah.
that's a lot. That's a lot. So okay. But for privacy, I'm sure that for a lot of people, that's worth it. So just need to know the fees before you get in. No monthly maintenance, no Forex spread, no withdrawal fee. Love it. The Nomad break-even analysis. So unlike traditional cards that extract micro fractions on hidden FX spreads over time, Goblin front loads its revenue. So for high volume international travelers, the 0% FX spread, that will definitely recoup the $350 issuance and whatever the deposit spread is. So it just depends, I guess, on your usage and what's important to you. Okay, so let's see here. Limit engineering, the 24-hour rolling clock. Standard bank architecture, double dip vulnerability. So if you would draw 500 bucks at 11:58, and then I guess there's some type of limit that resets, you can withdraw another 500 at 12:02. But with Goblin, it's a cryptographic rolling clock. So if you withdraw at 2, the next withdrawal is unlocked 24 hours later. And these are, I guess, their operational thresholds. So you could only spend up to 25 grand a month with this, I guess. The ATM limit is set very low at $500. And 5K in daily spend, I mean, you would end up hitting your monthly spend limit after 5 days if you're spending 5K a day. So here's the key insight: that rolling lock is a sophisticated anti-fraud measure which prevents malicious actors from extracting double the daily limit across an arbitrary time zone reset boundary. Interesting. Okay, reputation versus reality, navigating counterparty risk. So, user sentiment. Is Trustpilot even a thing anymore? Like, really? Like, can't
I've
that be
never used it.
gamed? Nah, me neither. So it says here the objective risk profile. So objective according to Notebook LM, that is. So objective according to Google. Operating in a regulatory gray zone means zero sovereign deposit insurance. Okay, who gives a fuck about FDIC? Users have no legal recourse against sudden banking partnership revocations, frozen funds, or decentralized finance exit scams. Well, you don't have any, you don't have any insurance against this stuff anyway. So it says trust is placed in.
You
Yeah.
just need to understand the risks.
Yeah. It says trust is placed entirely in the operational competence of the pseudomonous founders. Yes, I would agree with that. Okay, so you've got Goblin competitive landscape. So there are more of these. Oh, wow. I didn't know that there were more of these. Awesome. So you've got Goblin cards, you've got Soul Card, you've got Lasso Finance, and you've got Plasbit. Huh. So it looks like Goblin Cards is the absolute non KYC contender, while the rest of them, this requires some type of, it looks like maybe some of these are not quite as non KYC as Goblin. So here's that crypto card trilemma. You've got absolute anonymity, you've got mainstream convenience, and then you've got institutional compliance. Got it. Okay. So it says Goblin Card sacrifices mainstream mobile convenience and cheap issuance to survive regulatory scrutiny. Alrighty. And a premium instrument for a hostile environment. I love this, man. Let's go ahead and watch that piece of video content. And then we've got a couple of minutes after that. And maybe tomorrow, Mike, we can get into the TON network if we run out of time today.
Over the past decade, international regulatory bodies have systematically integrated the cryptocurrency ecosystem into the surveillance apparatus of traditional banking. Accessing liquidity now requires a series of mandatory hurdles: full identity disclosure, continuous transaction monitoring, and live facial biometric checks. This architecture of compliance is spearheaded globally by the Financial Action Task Force, which mandates stringent Know Your Customer and anti-money laundering protocols across all.
Okay. Who the fuck is this guy? And why do we have to care about this guy? Or like, what is this? This is some French group? Fuck the French.
It's
Action
kind
Task
of
Force,
funny.
which mandates
The sign in front of him, it said president of DU, like GAFI or something like that. What popped in my head is the president of Do You Give a Fuck?
No. You know, and like, why do we care what the French have to say at all? Like, I don't at all.
stringent Know Your Customer and anti-money laundering protocols across all member jurisdictions. In Tier 1 markets, frameworks like the European Union's Markets in Crypto Assets regulation make it nearly impossible to issue payment instruments connected to Visa or MasterCard without verifying exactly who is holding them.
Yeah, because they want to steal from you. And they criminalized non-KYC products. That tells you a lot.
Yeah.
Yet a highly specialized counter-economy continues to operate outside these international mandates. Goblin Cards offers a physical, globally accepted MasterCard that functions with zero identity verification, operating at the sharp edge of technological capability. Understanding how an anonymous, offshore entity maintains its standing within the heavily regulated MasterCard network requires looking past the branding and into the hidden layers of the financial stack. Modern financial anonymity relies on specialized regulatory arbitrage, leveraging specific jurisdictional gaps to force the traditional banking system to process transactions for an unidentified entity. The user's primary interface with this ecosystem is a physical piece of plastic, manufactured and shipped entirely without a cardholder name embossed on the front. However, this commitment to a no KYC model results in a glaring functional absence. There is no integration with Apple Pay, Google Pay, or Samsung Pay.
Honestly, who cares? Like, the whole point is sovereignty. Who
I
cares?
don't think I've ever used Google Pay, Apple Pay, or any of those.
I use them a lot, but if suddenly they vanished from the face of the earth tomorrow, it wouldn't matter to me, not one iota.
This is a direct consequence of the EMV payment tokenization specification utilized by mobile wallets, which swaps the card's primary account number for a device account number. To provision this token, the issuing bank must execute a mandatory step-up authentication protocol. Because the issuing platform possesses no linked personal data, it cannot pass this identity-based check, causing the tokenization process to fail.
So look, this is how they dox transactions to you. That way they can go back through all your history. I'm sure it's saved in some database somewhere. And you know what? It's probably just a matter of time until governments start weaponizing these data against their citizens if they haven't started to do that already.
Users who prioritize total financial anonymity are ultimately forced to sacrifice the everyday convenience of smartphone-based contactless payments. Relying on a physical plastic card is a strict engineering constraint required to bypass the heavily authenticated gateways of modern digital identity. While the physical card tap provides anonymity at the counter, the back-end network routing is bound by traditional banking logic.
It's not
If the
anonymity.
platform operated
What's that, Mike?
It's not anonymity. When you're tapping your card, they know exactly who owns that card. They know it's anything digital. Just understand. I mean, me and David were talking about this last night. About our phones, because I used to work across the street from a massive data center in Utah that monitors the majority of cell phones and internet activity. And this was like, 10, 15 years ago. I can only imagine what it can do now. But if you have a cell phone on you and there's connectivity, just assume everything you say and do is being monitored. I mean, even things as benign as ads. I'm sure all of you out there have had a discussion with somebody about something like, oh, I'm thinking about taking a vacation or something like that. And then all of a sudden on Facebook, you go on Facebook and there's ads for vacations. You just have to assume that you're always being watched, you're always being listened to, you're carrying the worst possible spying device. They can turn on the camera, the microphone, they can track your movements, your location. It's just we voluntarily invite all of this into our lives. So just assume when you're tapping your card, it's just they can see everything.
Yeah, but Mike, it's to keep you safe, man. We're just trying to keep everyone safe.
Right?
Yeah. Well, what was one of the founding fathers? What was his name? Where he said, like, if someone sacrifices liberty for safety, they deserve neither liberty nor safety.
Chuck
Was
Norris.
Yeah, I love it.
It was Ben Franklin. Those that would
Yeah.
sacrifice liberty for safety deserve neither.
Right. That's exactly right.
in a total regulatory vacuum, MasterCard would immediately revoke its bank identification number, shutting down the entire operation. To maintain its
Bitcoin fixes this. If people would demand payment in Bitcoin, then all of a sudden, all this KYC and MasterCard Visa crap just goes out the window.
network access, the issuer enforces an aggressive back-end firewall based on merchant category codes. Standard commerce, such as groceries, hotel reservations, and car rentals, route smoothly through permissive channels. But transactions flagged under restricted categories, like gambling establishments, pawn shops, or wire transfers, hit a hard rejection at the gateway. The most critical restriction hard-coded into this firewall is a strict prohibition against using the card to purchase other cryptocurrencies. This prevents
So you got to ask yourself, if these card issuers will not allow you to buy digital assets, why is that? Why is that? They always say, oh, well, we got to protect the children, the money laundering, the AML. That's a bunch of bullshit. The reason why they don't allow you to buy crypto is so that they can keep you as a tax slave. That's the reason why. Because the moment that you become free financially, then you know what? Those edicts from on high, they start to mean less and less. You got to be able to open your eyes a little bit sometimes.
Did you say edicts?
Edicts, yeah.
Like eat a dick?
Yeah, basically they can eat a dick, from
Like
those ivory towers.
an industrial sized dick. I like it.
Yeah, yeah, I like it too, man. They can eat a bag of dicks from those
Yes,
ivory towers that they live in.
that's right.
A circular money laundering loop, loading illicit digital assets onto the card, then using that fiat to buy clean, traceable tokens on a regulated exchange. While the platform presents total freedom on the front end, its survival depends on the aggressive anti-money laundering constraints it enforces on the back end. Issuing anonymous financial instruments carries immense operational risk, which the project subsidizes through a highly calculated economic structure. Traditional banking models provide cards for free and wait for merchant interchange fees to accumulate. This offshore entity requires immediate upfront monetization. This fee matrix shows the barriers to entry. Acquiring the card requires a steep initial issuance fee of $350, coupled with a baseline deposit spread of 3.5%. In exchange for this high entry cost, the platform provides an absolute 0% markup on foreign exchange rates and charges no independent ATM withdrawal fees. This fee structure captures a specific demographic, perpetual travelers and digital nomads, who recoup the upfront cost through high-volume cross-border spending. To prevent the platform from being used for institutional-scale laundering, cash extraction is capped with a rigid $500 limit on daily ATM withdrawals. These limits utilize a sophisticated 24-hour rolling reset. A withdrawal made at 2 p.m. on a Tuesday locks the user's cash access until exactly 2 p.m. on Wednesday. This prevents malicious actors from extracting double the daily limit by exploiting arbitrary midnight time zone boundaries. Geopolitically, the entity anchors itself in Mexico, leveraging a developing fintech regulatory framework situated distinctly outside the direct enforcement perimeters of the European Central Bank and the U.S. Treasury.
So wait, if they are in Mexico and we're talking about a quote unquote developing fintech regulatory framework, is that a euphemism for this is like a cartel card? Is that what this means? Like this is because I don't see how you could like run a business in Mexico and not be like, a
Oh,
cartel
their own
adjacent.
government. Their own government's beholden to the cartels.
Right.
You're telling me that a business that's going to move this kind of money doesn't have to bend a knee.
Right. So this has got to be like the goblin card's got to kind of be like the cartel, the Mexican cartel card.
Honestly, it could be. I mean,
It could
it could
be.
be. This could be like their on and off ramp for laundering money.
It's kind of gross, but I don't know. We'll see.
Framework situated distinctly outside the direct enforcement perimeters of the European Central Bank and the U.S. Treasury. Exorbitant
Dude,
entry
you know
fees
what?
filter out unprofitable.
What's that, Mike?
That's a really valid point that you brought up. Like this would be a really useful tool for cartels to avoid without the KYC and AML and stuff. It would be a really good way for them to work around like the U.S. government and the traditional banking system, the SWIFT systems, stuff like that, and be able to move money.
Yeah, but I mean, there's a lot of limits, and it's a 25K a month cap. So like the actual like size of the amount of money that you could move, it wouldn't move the needle for those guys. I don't think it's just too
I just
small.
I just wonder if they're if it is them that's building this out, if they would have built-in back doors to where they could do whatever they wanted. It's just the retail user has these caps.
Yeah, I mean, there probably are
I'm
backdoors
just
built into
I'm
this.
just throwing stuff out there. But sorry.
Yeah, yeah, yeah. So I just I think to myself that the non KYC aspect of this, it puts the sovereignty back on you, where like it's up to you at that point to just maintain OPSEC so that you maintain your privacy.
Well,
User risk.
everything I'm saying, they've done with fiat, and they work around the banking system already. I mean, it's not like that. This is going to open new doors. It's just a new way, a new avenue, for them is all.
Yeah, yeah. I mean, potentially. I think it's just too
Potentially,
small. Yeah,
absolutely.
I think
Well, like I
25K a
said,
month is
if they're
too
building it
small.
out, I wonder if there's if they could build in back doors and stuff like that. Like I said, to where they can do whatever they want. There's no rules for them. There's just the facade, the retail facade is there's rules. But
Yeah.
go
While strategic offshore jurisdiction provides the geographical insulation required to delay immediate regulatory takedowns. The highest point of vulnerability in this entire architecture occurs before the physical card is ever swiped, the moment digital assets are deposited. Funding a non-KYC interface using standard, transparent ledgers like Bitcoin or Ethereum creates a direct, permanent, and auditable path. Blockchain forensic firms scan these movements to correlate a user's verified identity at a centralized exchange directly to their anonymous physical card. Achieving the promised anonymity requires users to bridge through Monero, which provides a significantly more opaque transaction path. Monero's specific cryptographic features, particularly ring CT and stealth addresses, obscure transaction amounts and receiver identities, acting as the non-negotiable prerequisite for financial privacy. Even with flawless on-chain security, severe physical vulnerabilities remain. The global couriers responsible for delivering the card retain permanent auditable records of the destination address and the recipient. At the retail level, raw transaction metadata, time, location, and purchase amount can easily be cross-referenced with high-definition point-of-sale surveillance networks. The card may have no name, but the person holding it is recorded. The plastic card provides zero inherent operational security. True anonymity is determined entirely by the user's execution of physical evasion tactics and digital hygiene. From an opaque Monero ledger across a 4% conversion spread, past a stringent merchant firewall, and finally down to a physical EMV chip swipe. While a specific demographic praises this routing mechanism for its utility during international travel, the objective risk profile remains severe. Operating outside of sovereign oversight means users must balance flawless product utility against immense counterparty risk. If the underlying banking partnership dissolves or the founders cease operations, users possess zero legal recourse and zero deposit insurance. The platform serves as an expensive, high-risk, and specialized instrument for sovereign individuals who require a resilient fiat off-ramp and are willing to pay for it. As sovereign regulatory bodies continue to eradicate financial privacy in mainstream markets, the demand and necessity for sophisticated regulatory arbitrage will
Oh man, yeah. So the video kind of crapped out there at the end, but I think that there is definitely a demand for a product like this, and you can see that if we just hop back into the slide deck, Mike, and we just take a look. I think it was one of these final slides here where you can see all the competitors. So I want to take a look at these. We've got Goblin, we've got Sol, we've got Lasso, and we've got Plasbit. So definitely want to take a look at some of these competitors to Goblin cards. And it looks like the privacy level differs based on the different issuer that we're talking about. But this is really interesting to me, man. I'm definitely interested in learning more about these new non KYC or more private products. So with all that, I think we've got 2 minutes left. And in the last couple of minutes here, I just want to hop in and take a look at a couple of charts before we wrap things up for the day, or at least for this call, not for the day, but just for this call.
We still have three shows the rest of the day.
Right. So here's BTC. So little pullback today, but the important thing is the test of that 200-day moving average. So there's the test of the 200-day. It's something that was interesting to me. I was thinking, what did it look like in 2022 when Bitcoin tested the 200-day moving average during a bear market rally? What did the candles look like back then? Well, here are the candles. We got the one test with the wick, a second test with another wick, and then that led into the next couple of weeks moving to the downside. Actually, the next several months moving to the downside. So we got two wicks up at the 200-day, but unable to break out above the 200-day back in 2022. And in 2026, we've only got the one wick, basically at the 200-day moving average. So are we going to see another test? And we could, especially if this level of trendline support holds. So where Bitcoin is currently trading is support. We've got this breakout. This is a breakout above what was resistance. So this was trendline resistance. We got the breakout, and now we're just testing. So you could view this as an opportunity to buy. You could say, hey, you know what? We're testing the breakout. I want to buy it for a push, but I'm just not convinced of that. If we take a look at ETH wasn't even able to get up to the top of any level of resistance up here, just kind of fading, unable to even break out to highs higher than what we saw in April. Same thing with Solana. Really not much of a bounce here out of Solana, but we could see another day or two on the upside out of some of these alts if Bitcoin holds on to its gains. But the thing that's a little bit irksome for me is what the S&P has done, just literally going straight up. The moment that this thing wants to dip and just test the breakout, I think that would give Bitcoin the push that it needs to break back down into this channel and potentially down towards the bottom of the channel. So that's the way I'm playing it.
Awesome. Well, if you could, please come on over to thenode.pro. It is where you can find everything the Node, and it's where you can find our programming schedule. If you're interested on when our shows are on, it's also on YouTube. But this is a great resource. Is just our main website. You can find all of our no-cost courses. If you want to go through DeFi University, learn about fiat, the traditional finance system, crypto wallets, DeFi, learning how to earn yield in DeFi. It's 100% no cost, no gimmicks. Come and check it out. Community, if you want to join a great community of people, you can join our no cost Discord. You can obviously watch the shows. There's great content out there. We have the coaching, we have the newsletter, we have the store. There's just so much content, and again, a lot of it's no cost. Some of it, there's a cost attached. We don't accept any sort of payment for any project that we talk about here on the channel. That is set in stone. We want to make sure that both internally and externally, everyone understands that we are going to give an honest assessment of these projects, these protocols that we talk about. So we're kind of counting on the support of the community to buy these products to help support the channel, so that me, David, and Jeff can stop paying out of pocket to for years to fund the channel. So
yeah, we're cash flow negative right now. So if you want to support us,
cash flow negative, but we appreciate any support that you all can give out there. So with that, we thank you all for showing up. We thank you all for watching and liking, following, and sharing the stream. Please continue to do so. It helps us grow. We just want to be a channel of integrity and educate people. So with that, thank you so much. Gretchen Crypto out.
Peace.